This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, even though we did have retail sales coming in only unchanged. This versus the estimate of up 0.2%. So stock indices putting in a pretty good performance. We are seeing some of these geopolitical situations while remaining a bit on the back burner as far as an influence on stock indices. So with that in mind, the very low interest rate environment is beginning to dominate again. I think this will be a situation that is with us for quite some time as far as the very accommodative Federal Reserve is concerned. So look for higher from here today, higher longer term in stock indices. Over in the currencies, we are seeing the British pound sharply lower. This after a surprise decline in UK wages. This caused the Bank of England governor to indicate that interest rates could be raised later rather than sooner. At least that's the feeling. So that put pressure on the pound. Also, we had some short covering coming into the euro currency, even though we did have Eurozone industrial output showing a 0.3% decline. That was worse than what had been anticipated. In fact, most analysts were looking for an increase in industrial production. And the Japanese yen a bit weaker. This after GDP in Japan falling 6.8%. Although this was not as bad as some had anticipated. The median guess was a 7% decline. Still shows a very severe reaction to the April increase in the sales tax in Japan. So our feeling is that Japan's economy will continue to weaken. It will probably result in the Bank of Japan adding more reserves to their banking system. And of course, more accommodation means lower rates. Lower rates translates into a weaker yen. So from here, look for lower prices in the Japanese yen. Over in the interest rate markets, futures were a bit lower in the overnight trade. However, there was a very quick reversal in a rally to higher on the day when retail sales came in a bit weaker than anticipated. Also, we have a lot of supply this week, $67 billion in offerings from the Treasury. Once that is out of the way with Thursday's sale of 30-year bonds, of course we have an auction today. Once that supply is out of the way, I think we can see a move to new highs for the move within the next couple of weeks, especially for the long end of the curve. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Whoever gets it.